In today's gold and silver stacking series, we're going to be diving into why central banks around the world are buying gold at record levels and what that means to you and how it impacts your financial future. Hello, everyone. My name is Rick Fronick. I'm the CEO and founder of Work Smarter View and Silver and Gold Solutions, and I'm glad to have you here on our Saturday morning podcast and live stream. And I want to share some really great information as to why the central banks over the course of especially over the last 4 or 5 years, are buying gold at record levels. Now, this is something that I'm going to share some insight from a few other additional experts on this topic, but I wanted to share this with information because with everybody, as everybody knows that I always try to share the best possible information with everybody. Now, this is something that um, I want on our stacking Saturdays. We had our initial launch June 28th, and during that presentation, I had a wealth strategies presentation that I encourage everyone to go back and watch if you do not, if you were not on the live call that day. And then also with our stacking Saturdays, my main goal is to share information with you so that you can have a more informed decision on saving for your future in the form of precious metals, whether it be gold or silver or platinum or however you want to do it. But basically, just so you can take control of your future and have a more secure future for yourself and your family. Okay. And that's my main thing, is just to share information because there's so much information out there on the web. A lot of people are, they'll create videos just to gain traction and as far as getting views and everything to monetize it. Okay. My main purpose and sole purpose has always been to share information on stuff that I am following and learning about myself, and also to, to make a better decision for myself and my family in future. And so I want to share that information with you so you'll be able to utilize it and make your best judgment moving forward. So what I want to do here is, real quick, I'm going to just give a rundown of everything that's going to be on our presentation today. Today's July 12th. I'm going to share with you the overall view of gold and silver over the past 6 weeks. And then also, if you're on the fence about precious metals, and of course, not everybody is able to afford gold as far as in full bullions and our bars. But what I want to share with you is information on how you can take what I'm sharing with you today and be able to purchase it in incremental amounts. Like I said, I did do that wealth strategies presentation, so I encourage you to check that out. But silver is on the verge of something huge. Okay, and I'll show you that in the charts here shortly. But our main topic is why central banks are stockpiling gold. Okay, and then also we're going to have our special giveaway for anyone that's still on the live call towards the end of the video when we go ahead and do the drawing. Okay, so that is something that if you're catching this as a replay, I'll have a link below for you to register so that you get the live stream Zoom link every Saturday morning. And usually this one might take about 20-25 minutes, but typically we're going to try and keep everything under, in the 10 to 20 minute range. Okay, so just take a few minutes every Saturday morning and jump on and join us and get some insider information in the scoop on what's happening with precious metals. So real quick, what I want to do is I just want to go. This is my 6th week in a row that I'm doing a recording. Our launch of Stacking Saturdays was June 28th. But going back to June 7th, gold was at 3309.50 and silver was at 3602. So why it's important to take a look at this is because you're going to see the consistencies, and especially with silver, but then also gold is holding steady. So June 7th to July 12th, gold was at 3309.50. It went up, it went down back to, it's still higher than that, but dipped down to 32.75 at its lowest point on June 28th. But you see last week it started surging up and now it's 33.57. So it has actually held its momentum. And then silver has gone from 36.02. It has stayed very, very steady. Here we dropped just a penny below $36 an ounce. But as of today, this morning, silver is at 38.45. Now that is huge because if this is the this high it's been in 13 years. This is something that there's a reason for this, and we'll discuss that here in the video. But it's something to really to focus on, because right now, if you're unable to save in the form of gold, silver is an excellent strategy to use to actually benefit from the increase that it's having right now. So we'll get into that a little bit more, and I'll show you some charts on that as well. So what I want to do is I do want to remind people that if you're looking for additional insight, I highly encourage you to check out Mike Maloney from goldsilver.com, and we're actually going to share a clip from him today. Robert Kiyosaki from Rich Dad Poor Dad, Andy Schectman from Miles Franklin, and of course also Jim Rickards. Now, all four of these gentlemen have their own YouTube channels. They do share insight on gold, silver, precious metals, oil, as well as real estate and stocks. So it's not they're just not focused on precious metals, but that is their main forte that they are experts at. But they do share a lot of other great information. So I encourage you to check them out as well. So in this video here, this is one courtesy of SDBullion. Now this is in this video. There's going to be, it's about a 3.5 minute clip that I'm going to share, but I want you to, this is from an additional expert. Okay. And somebody who's gives a good explanation of why the central banks are purchasing gold in massive amounts. So we're going to go ahead and play this clip here. Okay.
Bid for gold and bullion ongoing in record sizes. Asian bullion demand, even at or near record nominal price points locally near anywhere you look, well, that demand is not stopping. It's instead climbing in nominal fiat US dollar terms. North Americans are still asleep at the wheel regarding gold, but they're arriving late to the building bullion mania ahead. That is to be expected. On net, government central banks continue buying gold bullion in post-World War II Bretton Woods and full fiat currency era in record size. About 1/3 of them recently surveyed, with about 1/3 of them stating somewhat new rationales for increasingly buying bullion. Things like concerns about U.S. sanctions, anticipation of changes in the international monetary system, part of their de-dollarization policy. All three of these relatively new admitted sentiment drivers are amongst the old standard reasonings for buying gold bullion among central banks. Famed author of the best-selling book, The Black Swan, Nassim Taleb's commentary on Bloomberg was probably the normally-shaking gold-related clip of the week. Here's what he had to say.
The slow decline of the dollar. And effectively, the second risk, so the first one is the deficit. The second one is effectively that the dollar is losing its status as a reserve currency.
What proof do you have of that, though?
You can see the accumulation of gold in the reserves and the behavior of gold over the past 12 months. And it didn't start with Trump's policies. Of course, it started with Biden when he froze the accounts of people connected to Putin.
Right.
And of course, thinking that it'd be limited there, but people not connected to Putin, okay, so decided to stay away from the euro and the dollar. And gold is effectively now the reserve currency.
So
transactions take place in dollars, euros, usually dollars, and at the same rate. However, they get converted back into gold. And we can see it from the accumulation of reserves.
You know, it's interesting. Citigroup just this morning said the gold rally might hit a timeout this year. They said that it could start to retreat after running to near record highs.
What do they know? How do they know?
My question to you, if you were afraid of where the U.S. deficit is, if you were concerned about the dollar, and at this point, geopolitical risk, are you stockpiling gold? Even at this level.
Okay, I'm not a central bank, so, but I mean, I think that with what's going on now, particularly with the new administration, the perception of America is the riskiness of America has increased. So on top of that move into gold that started with Biden, we have now a move to gold by people who are afraid of these policies,
including central banks around the world, which doesn't look
especially central banks around the world. So the dollar is a good transactional currency because people can label things in it, but not necessarily a storage currency. And this is what we're facing now.
U.S. banking.
Okay, so this is something that. So, and this is something I did want to point out. Whoops, hang on a second. Sorry about that. So, in that video, yes, well, I'm having a little technical difficulty here. So, in that video, when he's making the comment that, like right now, if you listen to the mainstream media, they try to make everything be be based on what President Trump is doing right now, which is impacting the economy. Of course, yes, the decisions he does make, the decisions he makes does impact the economy. However, with the gold and the central banks and with them purchasing a lot over this, stockpiling it, all started with when Biden put the sanctions on Russia. So what happened is all these other countries around the world, they started thinking, oh, wait a minute, if we do something that the United States does not are they going to put sanctions on us? So this is what started triggering all these central banks to start buying in like, massive amounts. Okay. So this is something that it's not President Trump's fault. It's actually what triggered it was the Ukraine war, Russia war, and when Biden decided to put the sanctions on Russia. And so, if you haven't looked at it yet, I have done a few talks on the BRICS nations, the Brazil, Russia, India, China, and Saudi Arabia, and all the countries that are trying to get into this new form of currency. Okay, so it's basically a gold-backed currency, which would these other countries would be able to purchase and sell using this new currency. Now, this is something that it has been ongoing. The BRICS nations has been around for a while where they've been trying to implement this, but this is something that the more and more with everything that's happening now and with more central banks stockpiling gold, this is opening up the avenue for other countries to use another form of currency if and when it does get into place, use another form of currency other than the US dollar. Okay, so this is something to kind of keep in mind as food for thought. Okay. And I'll show you in a chart where you can see really the huge difference in the central bank purchases, once the Ukraine-Russian war started. So let's go ahead and go to the next piece here. Now, this is from all these articles and video clips that I have. I'll share links below the video. So if you want to watch the full thing, you can, or else if you want to check out the full articles, you can as well. So this is courtesy of U.S. News and World Report. Here's this was on June 5th. Okay, so London central banks worldwide are on track to buy 1,000 metric tons of gold in 2025, which would be their fourth year of massive purchases as they diversify reserves from dollar-denominated assets into bullion. Gold prices are up 29% so far this year after hitting a record high of $3,500 a troy ounce in April on geopolitical tensions and economic uncertainty as President Trump continues to roll out his tariff policy. So you remember when he first mentioned that was a big factor in the driving price of gold to hit that record high. The price rally has so far kept purchases by central banks a crucial category of demand, unaffected with the first quarter buying in line with the 2022 to 2024 quarterly average. So this is something that, this is one perspective. Okay, this is courtesy of U.S. News and World Report. Like I said, I will have this article below as well, the link for it. And then this one here, gold and silver and platinum are all poised for further gains in H2 in 2025. Okay, now this is courtesy of Kitco News. This was just from this past week here on July 9th. They had this article. And what I'm going to do here is I'm going to, give me 1 second here. I'll pull this up. I'm going to actually pull up the article. Let's see, 1 second. 1 second here. I apologize about that. Okay. So in this article here, after strong first half performances from gold, silver, and platinum, many investors are wondering if the metals have topped out. But many of the factors that drove precious metals to these lofty price levels remain intact. Okay. After a phenomenal first half, the investment metals sector has entered a period of consolidation. Gold has traded sideways for the past 12 weeks, creating space for silver and platinum to play catch up. And I'll go with talk about silver here in a moment. Yet with year-to-date gains of roughly 26% for gold and silver and a remarkable 54% for platinum, the natural question from investors is that, is that it? Are they going to stop raising? Is the price going to stop going up? But we believe the answer is no. He goes on to say here, the key drivers that propelled metals higher in recent years remain in place, while additional tailwinds could emerge in the second half of 2025. Most notably, the prospect of lower U.S. interest rates could reignite demand, especially for metal-backed ETFs by reducing the opportunity cost of holding non-yielding assets like precious metals compared to short-dated government bonds. Um, and then he is to understand the enduring appeal of gold as well as silver and platinum. Hansen said investors must understand what sets them apart from other assets. Precious metals are politically neutral, unlike sovereign bonds or fiat currencies. They are universally recognized as a store of value, not tied to the creditworthiness of any nation, which is why central banks are increasingly allocating to gold as a core reserve asset. Okay, so that's where this is key. Okay, this is something where it's kind of coincides with what I've shared so far. This is something where the reason why the reason why they're doing this is because of the uncertainty of the U.S. dollar, but then also, there's been rumors and there's something happening behind the scenes where all these central banks, they're not just buying, stockpiling the gold just to say they have it. Um, there's been talk about going back to a US dollar backed by gold or having some other currency backed by gold, whether it's even, you've heard people talk about Bitcoin being backed by gold, like if the US incorporates that into their currency, the Bitcoin and having it backed by gold, there's been talk about that as well. Okay, so what I want to do here is I'm going to go ahead and pull up this other section here. Oops. All right, sorry about that. All right. So okay, so this is, I made the comment about I wanted to show you this chart. Now, this is really eye-opening. So this is central bank purchases in gold, and this is courtesy of macro micro chart. So this is something that you can look up online. Okay, but what I pointed out here is the key date is February 24th, 2022. That was the technical start of the Russia-Ukraine war where, everything escalated. But if you look here, here's January. Here's February. As soon as February hit, boom, look at this. So you're going these are in tons. Okay, so right after the war started, here is what all these central banks started doing. They really started stockpiling, and you see it here. And look at going back to 2010, the highest they ever had was around in the 220, 250 range right here. And even on the lowest month here, okay, right here and then here, that is where it's been lowest. But you look at all these months where they're stockpiling, and that has a lot to do with everything that's happening globally. But also you have the conflict in the Middle East, you have the conflict in Ukraine and Russia. So these are all things that are contributing to it. Okay, so this is another article from this is from Forbes. Okay, and this is from July 2nd. Global central banks bought another 20 tons of gold in May as conflict erupted in the Middle East. Total purchases were up from 12 tons in April, but lower than the 12-month average of 27 tons. So even though it was a little bit lower than the 27, the 12-month average, it still was a significant amount. Uh, Fresh tensions in the Middle East may have reinforced the strategic appeal of gold for central banks, looking to safeguard reserves against geopolitical shocks. Okay, so because anytime there's any type of conflict, you don't know what other countries are going to do, who they're going to side with, what they're going to do to try to mitigate any type of conflict or whatever, or if they have a way to present a resolution for these countries. So anytime that there's any type of turmoil or conflict, this is going to drive the price of gold up. Okay. Gold demand has risen sharply in recent years, driven by military actions in Europe and the Middle East and concerns over the impact of fresh trade tariffs on global growth and inflation. Central bank buying has also risen as reserve managers have sought to diversify their holdings away from the US dollar and towards other paper currencies and gold bullion. So how this kind of impacts you directly is as these central banks are purchasing gold and stockpiling it. The U.S. has to do the same thing. Okay. And I did not have put together a chart for that. I apologize, but the U.S. still has to stockpile gold to be able to say, okay, this is why you should rely on the US dollar, why you should still transact in it. So if President Trump does make the decision to go back to a US gold or a gold-backed US dollar, that would be the benefit for the United States to have other countries to continue to transact in the US dollar, because if it is backed by gold, then they can say it. So with all these other countries stockpiling, the United States has to be putting to, they're supposedly the biggest holder of gold in the entire world. And so that's something that, they need to continue to be the biggest stockpiler of gold themselves if they want to maintain the value of the US dollar across the entire globe as far when it comes time as far as trading and buying, buying and selling and doing things. Okay. So I want to share this and then I'm going to wrap everything up. I'm really excited to share this with everybody. This is some great information and I hope you're enjoying it so far. Now, this is just a short clip I'm going to share from Mike Maloney. Now, this is something I did share before on another video, but I do want to reemphasize this because if you're saving or if you have a financial advisor and you're trying to save for your family and your future, this is very key because if they're not, I've said it several times before, if they're not recommending you saving in the form of precious metals, then they're not looking out for your best interest. I'm sorry. That's my opinion, but I've heard many other people say the same thing, whether it's Mike Maloney, Robert Kiyosaki, Jim Rickards, Andy Schectman, all of them, they all say the same thing. You do have to have a certain percentage. So let's go ahead and listen to this. All right. Sorry about this. My apologies.
My dears.
I do
Okay.
think that we are entering the final phase of this bull market and that you're going to see some absolutely astounding results for once, showing the risk versus reward ratio for gold and stock mix, and the highest, the best stabilization, the lowest volatility in your portfolio, with the highest return comes where you have about 25 or 30% gold in your portfolio, not 10% or 5% like Wall Street suggests is the maximum that you should put in there. This was that chart incorporated, I think, 1971 through 2020 or something, 2022. It included the big bear market from 1980 to 1999. If you just go with the fact that we are currently in a gold bull market, that would probably pump gold up into where you want 60% of your portfolio in gold for the maximum reduction in volatility, a lowering of risk, and the maximum return.
Mm-hmm. Yeah, it was super. It would definitely be super high. I don't know the percentage off the top of my head, but it would be high. Probably a majority of your portfolio would be in gold, probably. Yeah.
We need to find that spreadsheet.
Okay. So, and with what Mike is talking about there is, and it's what I've said before, as far, having a certain percentage that you're saving on a regular basis. Okay. Now, typically, financial advisors, to my knowledge, will not recommend precious metals because it's not something that they're going to make money off of you by transacting. And yeah, they could maybe make a purchase for you, but at the same time, it's not like with stocks or managing your portfolio where they're moving stuff around every time they do something, they can't charge you. So with silver and gold, it's one of those things that or platinum, it's one of those things that you purchase and you sit and you hold on to it. Okay. And then of course, if something happens, then, you can, liquidate it. But that's why I wanted to, I encourage people to, and I'm going to give a plug for the company that I highly recommend right now, and that's 7K Metals. I will have a link for you to check them out below the video as well, because they have something unique that no other company on the planet has. Okay. And that's where you can once you have your account or in your membership, you can actually purchase gold and silver in as little as $1 at a time. But what's key about it too is as you're saving in the form of silver and gold, if you have an emergency or something comes up, you can actually, with a click of a button, change it back from silver or gold to fiat currency and then have it deposited in your bank account. So that's something that's very unique to them. Okay. And this is all stuff that takes seconds, really. Okay. So with the silver to gold ratio, okay, so this is something that I've talked about many times before, but in this case here, like I've said before, and this goes back to March of last year. But this is an article I've shared several times where gold always spikes up first, and then silver always lags behind, and then eventually catches up. So typically the gold to silver ratio in modern era generally ranges between 40 to 1 and 60 to 1. And so like right now with gold at 33.57 and silver at 38.45, that means it takes 87.31 ounces of silver to equal 1 ounce of gold. So if you go to it, eventually what's going to happen is silver will get back to that 40 to 60 to 1 range where it would take 60 ounces of silver to equal 1 ounce of gold. So what that means is the price of silver has to go up in order to reach that. Okay, so this is something that kind of keep in mind. About a little over, I think about 2 months or no, it's about 6 weeks back, the gold to silver ratio was over 100 to 1, which would have been an optimal ideal time to really kind of stockpile silver if you were able to. But you can't turn back the time and do it. But so kind of keep this in mind, this that gold silver ratio. And you can do this at any time of the day, whenever as a day closes for the markets, you can say, okay, well, gold is at this, silver is at this is what the ratio is. So what you're going to see is you're going to start seeing that high, like in this case here, 87 to 1, it's going to start going like this to where it's 40 or 60 to 40 to 1 or somewhere in that area there. Okay. So I did want to share that with everybody. And real quick, I'm going to go ahead and wrap it up. I see that I've got, where's my notes here? Okay. So I have people that are still on the call right now. Give me 1 second here. All right. So we have Roger is still on the call. All right. And then I've got um, Amelia, and I also have Alicia and Louise. Okay. So let me go ahead and draw this. This is for the drawing for we're giving away a 1 ounce silver American Silver Eagle today. And I do want to share something about the information that's on the thing there. So in this case here, let's see. Next week when we have more people on here, I'll probably do the flippity thing where it's a circular thing where I put in everybody's name and then it'll pick the drawing itself instead of me writing people's names down. Okay, so the winner for the American Silver Eagle is Amelia. So congratulations, Amelia. Just go ahead and send me your full name and address, and also send me your phone number, and I'll reach out to you to make sure I have everything correctly, and I will get that mailed out to you as quickly as possible. With it being Saturday, probably be on Monday that I get mailed out, but reach out to me at rick@silverandgoldsolutions.org, and I will be able to I'll get in touch with you. Okay. So I had mentioned before about 7K metals. Okay, so this is something that if you do decide to look into 7K metals and create your membership and start with them, and you do it with the link below, you'll be a part of the Silver and Gold Solutions team here. And what I would do is I would send you one of these, the coffee mugs, which is shown in the photo there. But then also I include a 1 ounce copper coin. That's a pure copper coin, and that's something because copper is another precious metal. So that's a gift from me to you. But then also I do send out the Buffalo Indian silver 1 ounce coin too. That's my gift from me to you for being a part of our team and taking control of your family and your future, with precious metals. So, and that's like I said, this is something that I'm really excited to share this information with everybody because when my goal from day one has been to share as much information with people out there that I possibly can about something that they might not have the time to look into or something that they're maybe not familiar with. And a lot of times people know that they should have some type of precious metal, whether it's gold, silver, or platinum. Um, they're not sure how to go about doing it. It's something that they hear people talking about all the time. And then I just want it to be one of those things where you have the right information or enough information to where you can make a decision that's going to benefit yourself and your family down the road. Because whether the price of gold or silver goes up or down, it's still something physical. It's still something tangible. And it's like they said, it's something that's why all the central banks are stockpiling it because it's something that regardless of what happens with the economy, it's always going to have its value. Plus, you can go into any country in the world and they will gladly take silver or gold. Okay, so let's kind of keep that in mind as well. So I hope everybody enjoyed today's show. Like I said, I'll put a link below for if you want to sign up so you get the live stream Zoom link next week, and then you'll be able to participate in the giveaway. And next week, I'm going to be giving away another membership. That's what I did on our launch. So I was over a 200 and like a $239 value. And then also last week I gave away an American Silver Eagle, and then this week we did as well. So congratulations to those who participated and who stayed on the live call. I want to thank everybody for your time, and I hope you got some great insight from this presentation. And I will include my contact information below. So if you have any questions, or if you want to reach out and have a private wealth strategy presentation, I do those in person, and I can also do those online via Zoom or Skype or something for yourself or your family, or even your business. If you're a small business owner, you have like 3 or 4 employees or something like that, where you want to actually give them the opportunity to save in the form of silver and gold, I can share that information with you as well. So thank you very much for your time, and I will see everybody again next Saturday morning at 10 a.m. Central Standard Time. I will talk to everybody soon. Take care.